Welcome back to Metals and Momentum, and here is what is going on in the charts. We're just going to jump right into it because I think we're on the edge of having a decline in overall broad markets on the S&P 500. I think we're going to decline in gold. I think we're going to decline in silver. I just went heavily short into silver right now, playing on the inverse, using those inverse ETFs that we've been playing with for pretty much all year. As the S&P 500 is kind of rolling over, we were playing a little bit on the inverse there, a little bit of inverse oil. So I want to show you this crazy setup that happened on WTI. So a lot of people are watching the price of oil right now, and this is very, very odd what is happening on WTI here. So you could actually see on the chart here, we had that massive topping tail. We went into what is known as a bear flag. So that is when you get this massive move downward, and then you get some sideways consolidation. I'm going to change this over to yellow so that way we can see this nice and clearly here. This is our bear flag that traded in a little bit of a range right here. We've traded not only this decline right here, we also traded this decline right here, and now we traded this decline right here as well. So there have been 4 major declines in the price of oil over the last little while since we began this Iran crisis, and we were short for 3 of them right here, which is absolutely crazy to think about. And what's interesting is on the chart, you can see that there was this breakdown out of this channel. We retested up to the base of the channel, the bottom end of that channel, and now we are trading downward. And what makes this so interesting is this is just classic technical analysis. Bear flag, break the bear flag, come up, retest that bottom of the bear flag. We didn't actually close below or back into the channel. So that way, this was actually, I was shorting right up into this section right here, rode this to the downside. We exited yesterday right at the open. I think we caught something like 5.7% gain in just a few trading days, and I went pretty heavy into this, so the dollar value was absolutely fantastic. Right now we are trading a little bit lower, but you know, it looks almost like we've formed out a little bit of a temporary bottom in the price of oil, because you have these long wicks right in this general area right here. This long wick is like essentially the market rejecting this lower price and then trading back upward into the larger candle right here. So we are seeing very long wicks today and yesterday on WTI, and that is a signal to me that oil might actually have a little bit of a run up, and it would also signal to me that Donald Trump is maybe not going to be able to successfully land a deal with the Iranians. And what is going to happen when oil goes up? Well, we've seen markets decline. They rallied like crazy over the price of WTI coming down. I think this whole thing is about to reverse. I am not long oil, just to be for sure here, and to be completely transparent. I am not going long oil right here, because if that deal does flow through with the Iranians, then the price of oil could drop 15% in a single day or something like that. I am no longer interested in going short oil. This right here was the perfect setup, and you know, markets sniffed out that trade deal coming, or like a Trump tweet essentially talking about a trade deal that is potentially in the works, and then going lower. That was a perfect setup right here. I'm completely hands off WTI. But what I'm thinking to myself is, why does the S&P 500 look like it's going to top out right around here? And we had a gap upward yesterday. That also is a signal to me that the S&P 500 could actually come floating downward and actually retest $7,000 on the S&P 500. To me, I'm just putting a number of different charts together, and they're all signaling that the S&P 500 is about to top out right here and then come back down and touch $7,000. I'll show you a number of reasons why, but what was so interesting is that is just one catalyst here that would tell us maybe this is the reason why that the S&P 500 would start to stall out right here, because maybe oil is about to reverse to the upside, and maybe we're going to retest $100 per barrel on oil. I'm not playing either side of the oil trade. Just to be completely transparent, I don't know what's going to happen right here, but I'm thinking to myself, why does the S&P 500 look like it's about to top out? And a lot of the indicators that I can put on the chart here are also topping out. Like, for example, we're getting not quite negative divergence, but like this is a negative signal right here. So when you look at the RSI, you can see that the S&P 500 has essentially gone straight up, but the RSI has actually peaked out right over here, right in this portion of the S&P 500 right now. And that is kind of confusing, right? If we've moved upward on essentially no more like strength, there's no extra strength added to the market right now. If this starts to peel downward, then this is going to be a very negative signal for the S&P 500. And the same thing goes for the MACD. So the MACD, moving average, convergence, divergence. This tells you if the market is overbought, and we have not been this overbought since the coming out of this section of the S&P 500 back when they were like raising interest rates. This was in 2025. We had that mini meltdown and then a quick recovery. Now, what's crazy is that, after that little mini meltdown, you were overbought on here, but you can still continue to go upward. So there's always that potential that, the S&P 500 could just carry on. But to me, this also looks like it's about to stall out here because you have a curving over on the MACD, and then also you have a topping tail right in here. That was a topping indicator. Now this topping tail did get negated once we made that big green candle yesterday. But what we're seeing is that, this little gap is also another signal on top of that that's saying, we're about to stall out maybe, and come back and retest maybe 7,000. To me, these two signals here, plus the MACD, plus the relative strength, plus the fact that oil is not going down lower, to me, this looks like the S&P 500 is about to reverse, and I'm very defensive right now in my portfolio. I think I have 3 positions on. One is like a huge position in inverse silver, and I'm going to show you that setup right here because gold and silver and the S&P 500, they've been all trading all in a row. If the S&P 500 is going up, then then the gold and silver are also likely going up as well. And the another red flag on the S&P 500 is the fact that we are putting in a topping tail on gold. Now, these are the little cute clues that I'm getting in the market right now, right? It's very confusing because you're like, on one hand, okay, the S&P 500 looks like it's about to roll over. So what is gold doing? And gold actually right here is putting in a topping tail on this chart right here. And this to me is also signaling that gold is going to go lower. So if gold is going to go lower, then what does that mean for the S&P 500? And then what does that mean for silver? That also, we know when gold goes lower, silver also goes lower, and probably to a more dramatic degree. So one of the questions that I had on the gold chart is how low could we potentially go on gold? And I mean, we have a little bit of a support line, 3.45% down from where we are right now. But ultimately, if that breaks, and I mean, if we try and retest there, you have this downward sloping channel that we've been trading in, and that is probably going to break pretty quickly. So the downside target target on gold could be a 7% drop. Reason why I like this support line right here, this is 43.59. This is in US dollars. 43.59. I like this level because you have the 200-day moving average right underneath that support line, 43.59 there. As we start to move onward and downward throughout the next coming, like say a week or two, or however long it's going to take to get down to 43.59, you're going to have that 200-day moving average creep up, and that's going to act like some pretty serious support there. So I would expect an immediate move down in the price of gold because you have the topping tail. That is telling you that 7% of the downside, that is the next serious support line. That is going to come in the next couple days. That is my projection, but I obviously want to play this as smart as I could possibly play it. And if gold is signaling that lower lows are coming, the S&P 500 is also signaling lower lows are coming, then the opportunity lies in silver. And what is the silver chart doing? This is the most interesting thing that I've discovered recently. Going back to the oil chart, what happened with oil, right? You had that big topping tail, sideways consolidation to the upside, big break. Here's the retest right here. And then what happened with oil? You get that massive curl over. And what is happening with silver right now? This is unbelievable, right? The setup on silver to the short side is fantastic. In fact, this morning, I sent trade notifications out saying we should play the inverse of silver. I went so heavy into this. This is a huge position for me, and we are already up significantly on this inverse silver play because what did we see in the beginning of the morning when the market opened? Silver was touching $81. There's major resistance right around $81. And then on top of that, you had the bottom portion of this parallel. I should actually turn this parallel red now because we are now negating that parallel. We broke down, we're retesting just like oil did right here. Now I am going inverse silver, and there is huge downside on silver. I actually took a negative 2x position in silver, and I just went crazy with the position. I am pretty heavy in inverse silver, and seeing a potential 12% drop, that would be a 20% return in my portfolio if you're 2x inverse silver there. So if silver drops down to $71, then my portfolio and that position will move up about 24% total. I will probably peel that off before it gets down that way because I will be up significant money and I will look to preserve that as well. But this to me tells me that silver is looking a lot like oil. And look at that. I'm just going to flip back and forth between these charts here for a moment and clean this up here because this chart looks, this was a perfect setup. And what is silver doing? Exact same setup right here. This is unbelievable. And I'm thinking to myself, why would silver drop? Okay, here's the setup that, you know, silver is having on the chart here. It looks like just like a perfect setup to go inverse and play that. Then if silver is dropping, then gold's probably dropping as well. Is gold in any kind of like bullish kind of pattern here? Well, actually, no, because you got that topping tail. Okay, what does that mean for the S&P 500? Well, then just going back to the S&P 500, that means that if all that is going to come into play, then the S&P 500 is probably going to drop, and that is going to be the catalyst for and then the next move lower in gold, the next move lower in silver, and that's probably going to mean that maybe oil is going to pop as well. That is my thought process on this whole setup that I took this morning. It is ridiculous. I can't believe how much we are up right now already in this inverse silver play. And one of the things that I was also telling subscribers who I know are going to be a little bit more heavier in cash than maybe I am. Some of my subscribers, you probably have a little bit more deeper pockets than I, but you got this setup on gold that looks like it's going lower. Then, okay, just add an extra layer on top of that gold trade if you want to get extra leverage to that gold position. Well, what is the GDX doing? Well, the GDX has actually hit a major resistance point as well. I told a couple subscribers that if I had extra cash right now and I wasn't so heavily in this silver short, then I would be looking to play GDX to the downside. And I shared with them a inverse ticker to the downside, and some of you took this position on. But here's the reason why. Well, one, we know gold looks like a topping tail on the chart there, maybe gonna pull back on the gold chart as well. What does that mean for GDX? Well, that's not good for the gold miners. So I'm looking at the gold mining chart and going, holy smokes, like we're actually running into resistance where you had a head and shoulder pattern on the chart here. This head and shoulders pattern would take you all the way down to $68 support there. If you crack that 200-day moving average, which is getting pretty close here, this is the blue line. If you crack that 200-day moving average, then that is how you get down there. We're already down on the day. You're going to probably get some sort of like bounce right around here, and then a move to $68. That is a huge amount of downside on GDX. If I take this all the way down here, that is a 28% drop. Now, I wouldn't hold for the full 28% drop. This right here, this is a 10% drop just down to 84.83. That is some serious support, so it's going to take a second to kind of bust through that. I would look to trim my profits if I was playing the inverse GDX kind of ticker there. So a couple of my subscribers did get in on that. If you are, this is the setup that I'm looking at. Beautiful setup because you got that head and shoulder pattern. This actually, what's really interesting is when you have a head and shoulders pattern, you can actually measure the downside on the chart here. So if you take from here to here, and then you would probably want to take like the lowest kind of point. So if you're breaking through that head and shoulder pattern, this would actually take you quite a bit lower. This is a huge drop from, not far off where we're at right now. That would be the max downside I would see, but I like this support level right here, $68 on GDX, and that is totally doable in the very, very near term. For me, if I were playing this, I would likely just take that 10% and run with that. There's a couple ways you can go 2x inverse GDX, and I shared some of that strategy with subscribers. If you want to just look it up on Google or something like that, you can definitely do that. Lots of ways to play this to the downside, but all these signals are telling me that if you put them all together, it equates to that SP 500 dropping, gold dropping, silver dropping, and then maybe oil is about to catch a bid. Maybe that is the catalyst to take, gold and silver and S&P 500 lower. And we are not, as I'm talking right here, we are not far off from breaking even on the day, which is pretty crazy. And these long wicks, these are telling you something that maybe that deal with Iran is going to fall through. And we need, I'm de-risking my portfolio right now. Like I said, only 3 positions on right now. And then one of those positions is heavy inverse silver. So that's the trade setups that I'm looking at. Very interesting charts right now. What an interesting time. We've had an unbelievable month over the last little while. If you want to join me on Substack, Metals and Momentum, you subscribe to the paid tier. It's $9 a month. You get access to my trade notifications. This is not what I think you should do with your money, but what I am doing with my money. And you can follow my moves over on Substack. The links are in the description. Thanks so much for watching. My name's Anthony. We'll see you in the next one.